What's up, everybody? Happy Wednesday. Just wanted to make a quick video here, so I apologize for the quality. Wanted to get this out really quickly here, just because with this, it's looking more and more like time may be of the essence with this here. So what I want to share with you guys today is it looks more and more like inflation, price inflation is about to break out pretty quickly and pretty severely. So we know that if you've been around the channel at all, I talk a lot about how inflation is it's sourced by monetary inflation, an expansion of the money base. And the reason for that is because of just basically supply and demand, right? So you have, if you have a production of goods and services that increases relative to the supply of money, then the supply of money gets stronger. Your purchasing power of your money goes up over time because relative to the existing goods and services, there's less money. And so they represent a larger portion of what's available. And so prices go down. The opposite is true as well. If the amount of money increases relative to the amount of goods and services in the economy, then each one of those dollars represents a smaller portion of the pie. And so the purchasing price or the purchasing power of your money goes down. Things get more expensive. And so over the last 10 years, we've seen an unprecedented, historically, globally, massively, exponentially unprecedented amount of monetary expansion. From official stats, we've seen relatively small price inflation. Private statistics and private sources show that it's been much higher than that, but still not to the point where the public and the majority of people would say, hey, we've had a ton of inflation. However, these things aren't linear. They don't happen kind of like step by step in a very predictable fashion. Usually they build under the surface then explode all at once from a catalyst. And so what the coronavirus is doing right now is looking more and more every day like it is prepped to be that catalyst that will potentially spark that inflation or hyperinflation. So a couple of things that are key to point out here. Number one, recently within the last couple of hours, actually, Tencent, it looks like Tencent may have accidentally leaked real data on infections and deaths from the Wuhan coronavirus on their news source that keeps up the running tally of infections and deaths. And the numbers that they accidentally posted before they very quickly took it down was 154,000 infections and 24,000, almost 25,000 deaths, which is over 10 times the official number, in which that more closely represents or kind of ties in with the measures that they've been taking. Which, if that's true, if those numbers are true, if it was an accidental leak of the real information, it looks like it would put the death rate, I'm sorry, I lost the number here, closer to 16%. It would be the death rate rather than, something like SARS had like a 9% death rate. So extremely deadly. And so the market is not taking into account the effect this is going to take on the world's largest producer of stuff, right? So Hyundai recently, they just announced that they're shutting down their production there because they're supply chain issues. They can't get enough parts, so they're shutting down factories. So what happens in the world when you've had a decade of unprecedented monetary expansion followed by a systemic shock where the supply of stuff stops? There's no new stuff being made right now, virtually. I mean, when China, the place where most of the world's stuff is made, has to stop making stuff, or even just partly stop making stuff, and they have this massive grinding to a halt of the world's factories, that's a catalyst for extreme inflation because you have the amount of goods and services dropping or stopping from growing, led by a decade of monetary expansion. Secondly, You have China, if their economy is grinding to a halt right now, they have a massive amount of reserves. They hold a lot of U.S. treasuries still. They have, the world's largest storehold of foreign currency reserves. So if they need to fund emergency measures for, their, building their hospitals, their health, keeping their economy from, completely imploding on itself, what are they going to do? They're going to rely on their savings. They've got a lot of savings. And so they're going to start to dump treasuries. Well, what happens when they dump treasuries and dump dollars? They're going to buy stuff from wherever it is in the world. And so all of this is setting up to be a catalyst for extreme inflation. And that's honestly, that's the, closer to the best case scenario. Best case scenario, we have a short period of time where prices skyrocket, really. Worst case scenario, this is, the catalyst for kind of the systemic collapse that is, potentially building in the system here that we're not going to get into on this video. But ultimately, even if it's a relatively short time, couple of months, maybe a couple of years of extreme price inflation, that could be devastating for you if you haven't prepared. At the very least, buying a couple gold coins, a couple 1 ounce American Eagles, get a couple $1,000s in some physical gold that you have in your house. You can go to the approved U.S. government mint approved dealers that buy directly from the U.S. government mint, U.S. Mint, and you can find those on their website. You just go to the U.S. Mint's website, look up their catalog, type in your zip code. It shows you all the locations near you that are approved to buy directly from the mint, so you're not going to like a pawn shop getting ripped off and buy, just actual, like American Eagles. If you don't have the ability to do that, putting some money in a gold storage service online. I like shiftgold.com. I'll link it in the description below. And just signing up for, some gold storage. The amount you're going to pay for the gold storage it's not going to compare to the amount of purchasing power you're losing from inflation every year. With the so storing up on that, getting some physical cash out, because if this hits the fan, if it comes to a city near you, ATMs are going to be empty, banks are going to be shut down, you're not going to be able to get cash. Storing up on getting some water cans if you don't want to have to leave your house because it's gotten that bad, or maybe there's a quarantine in your city, there's a good chance you're going to have grid interruptions, right? Because they're not going to be able to maintain the grid. They're not going to be able to run everything's not going to run as smoothly as possible. So you might have intermittent power, might have intermittent, water usage or gas or whatever. Your utilities might not be as consistent as they normally are. So storing up on some water, but especially food, right? If you don't want to have to go out, or if the prices start to skyrocket, there's a panic. Everybody starts draining the grocery store shelves. Doing these things in advance, if you buy what you eat, you store what you eat what you store, you're not going to be, losing money in the long run, right? You pull out some money from the ATM in cash, you still have your money. You buy some gold, you've got your savings, you're preserving your purchasing power. You stock up on some food that you already eat. Ultimately, you can still always eat it. You're not doing anything that's going to cost you money long term. You're just doing a little bit of preparation work to begin with here. So these are some things that it's crazy. Even now, mainstream, the majority of people are still saying, hey, the flu is more dangerous. It's preposterous. The flu has a much lower mortality rate, much lower, way less than 1%. The flu has a much lower growth rate. It's like 1.6 or 1.8% versus the growth rate that the coronavirus is showing right now could be, up to 6%. Depending on what the real data actually is coming out of China. And then the fact that you have asymptomatic carriers for 10 to 14 days who are contagious. These are all things that are, it's preposterous to even talk about the flu when something like this is possible. And it's only paranoid to prepare until you need it, right? Nassim Taleb says, be scared when you can, don't be scared when you have to be. And so just do some smart preparation, and then your investments as well. You put a hedge on, put some protection on, limit your exposure to risk, get into some, if the only option you have in your account, let's say you're in a 401k, I'm sure they have a hedged equity mutual fund in there. If you have a self-managed brokerage account, buy some puts, value stocks, dividend income stocks, Limit your exposure to the huge growth stocks that are have received most of the Federal Reserve basically support. Do some things. I've got a lot of material on this, the rest of my channel already, but do some things to limit your exposure. Prepare for this because this could be the shock, the kind of the catalyst that triggers that hyperinflation where costs start to skyrocket. And all of the monetary expansion that we've seen over the last 10 years kind of comes to fruition, and we see its effect finally on the global markets. So that's all I have for you today. I really appreciate you guys watching. Let me know if you have any questions or thoughts, comments below. Thanks.